Good afternoon. This is Chris Brecher with the Simpler Stocks free video for March 18th, 2016. It's 3:44, about 15 minutes from the bell. You can tell I've celebrated St. Patrick's Day a little too early, but all kidding. That's all totally kidding. Basically, today is all about follow through from Janet Yellen talking. And what we've got in here is that the market is just, every time it looks like it's going to sell off, it has an underlying bid. So right now, let me show you what we're looking at in here. We have right now where the ESs are up 17 points. You have the NASDAQ up only 10. It's been lagging all day. A lot of that is because there was some negative news on Amazon. So Amazon is down right now about 12 points. Yeah, the Russell up 21, finally breaking out of its bull flag, and I'll show you that in a minute. But just to show you on how Janet Yellen can change things, you have almost every asset class up again. You have crude oil up $1.53. You have gold, but I'm not sure if that's correct from yesterday, because I know yesterday it was up a lot. It seems like it's adding yesterday's into that. But you have crude oil, same thing. I'm not sure these are right. All I know is they're up a bit. Let's just leave it that way. You have the Nikkei down only 100, but it's just amazing to see the market up this much and see the bonds up that much. Now, why is that? One reason, I think that Janet Yellen came out and had a downbeat assessment of the economy. First thing everybody thinks then is another QE. I'm not saying that's going to happen whatsoever, but temporarily that's what's happening, and that's why I think you see the bonds up so much. One is because weak economy equals strong bonds prices. On the other hand, I'm watching the DBA that keeps going straight up, and I am in shock that she's not mentioning anything about it. This is the DBA, if I can get Thinkorswim to work. And basically, this is a composite of 10 different commodities. It's an ETF. So let me see if I can get this to work. Please give me a second. There. Well, part of it's working. That's better than nothing, I guess, right? So basically, the way it works in here is the DBA is the basket of commodity prices. Like I've shown many times in here, usually this is an inverse relationship with the bonds. So when you put the bonds up here and you unlink it and you look at DBA on the left and you see that it's at a new high in here, and usually bonds follow the same. What do I mean by this? The absolute high in the bonds was the low in the DBA. Very shocking to see it rally like this, the DBA, and watch the bonds actually rally also. I think that's an accident waiting to happen, but we haven't seen anything yet. Now, one thing I want you to realize in here is that Janet Yellen basically did a political move. The idea is she said she's worried about financial markets. Her mandate is unemployment and inflation, not the financial markets. But that's what you get in an election year, and that's what we've gotten many times. So you just have to take what's thrown to you. That's the whole reason that I like short-term trading, so you don't have to worry about noise like that. Now, when it comes to short-term trading, let me show you something pretty neat today. There were a lot of things to do if you weren't too opinionated. What do I mean by that? Look at the ESs here on a daily and put it on the 78-minute chart. And what I want you to see on here is, sure, we had that little blip yesterday and then we rallied. But what I want you to see in here is there's nothing in here that looked bad on the ESs since they got over 2015 earlier today. They were down early. They started rallying, and then there was nothing in here that looked bad. What do I mean by nothing looks bad? Put up the ADD here. And you'll see that the ADD never looked bad all day. Even when the market was down earlier today, let me unlink this. And even when the market was down earlier in the day, down here, all the way back here, when it was down, This was still up on the left, not this much, but as you see on here, it never even got to the zero line. So all day this showed underlying strength in the market. Now, that's why one reason I thought the ESs would probably stay up, and they did. Very interesting, though, is something else that happened later in the day. This is something you hardly ever see, is a VIX sell signal. Now, what do I mean by that? Put up the VIX on a daily. One of the keys in here, and I'm putting up the ESs next to it so you know what I'm talking about, is if the VIX goes above the Bollinger Band and closes under it, that's usually a sell signal for the overall market. Buy signal for the overall market. Put up the ESs on a daily and you'll see what I mean. Let's zoom this out and you'll see every one of these little spikes corresponded to a low in the market. Now, conversely, something you've hardly ever see is the VIX get under its Bollinger Band. In fact, if you go back a couple of years in here, it's never gotten under its Bollinger Band. Never. Unbelievable. I'm going to show you just on a daily chart. Look at this when you go all the way back. Even back here, it stayed at the Bollinger Band. Everywhere. This is the first time that I can remember where it went over the Bollinger Band. That's a potentially really negative sign. Now, that doesn't mean today it's going to go down, but it's definitely something I'm going to monitor like a hawk. No doubt about it. Why do I mention that also? Because tomorrow coincides to when a lot of companies can't buy back their stock. Not all of them tomorrow, but it begins the blackout period. Basically, companies can't buy back within 5 weeks of their earnings. Well, the preponderance of the earnings companies, the Googles, the Amazons, the Facebooks, the Apples, are in March 20th. April 20th. If you subtract 35 days from then, you get to March 17th, St. Patrick's Day. Why do I think this is important? Because if you saw any of the articles from Bloomberg or when I talked on Benzinga prior to the articles in Bloomberg, MarketWatch, and Forbes, basically this 3 months there's been $60 billion in outflows, but there have been over $135 billion of buybacks. That's what's propelled this market. So the buybacks, when they stop, we'll see what this market's really made of. But let me show you something interesting about companies that all of a sudden can't buy back their stock. Put up McDonald's here, and I'm going to take off the Bollinger Bands. You don't need that right now. And what I want you to see in there is this. Here's McDonald's that looked like a Head and Shoulders, and everybody on CNBC was talking about this being a Head and Shoulders top. And on Simpler Stocks, I said, you better watch out because they can still buy back their stock. Don't trust this Head and Shoulders. And the stock has gone up 10 points since then. Well, the interesting thing is yesterday started where they couldn't buy back their stock. This looks like a completely different market than the ESs. Now put the ESs on the left, which is the S&P futures. And notice on the left that we've gone straight up on a 15-minute chart. And look at McDonald's going straight down. McDonald's cannot buy back their stock right now. That's one of the negatives. Other negative, we have a rebalance tomorrow. The rebalance is the S&P rebalance. It's like this dirty little secret index rebalance that nobody ever seems to talk about except the street, and they don't share it with anybody else. If you go and put in CNBC and put in there, index rebalance, you have to go back 5 years to see an explanation of it. Basically, what happens is the companies that have bought back the most stock in the last 3 months, those indexes have to be rebalanced to take that out. So if a company, its capitalization goes down, the stock outstanding goes down, then it has to be sold on the close. So that's why you're seeing stocks like McDonald's that have big buybacks all of a sudden selling off on top of that they can't buy back their stock. So what I'm going to be watching tomorrow, we're going to be watching the big rebalance. I've been sitting here adding the stocks that have bought back the most stock in the last quarter, figuring these are the ones that are going to act the worst. And as you see today, if you sort these, you'll see most of them aren't acting that great. So actually, if you put in a different one I have in here, let me be sure I have it right. Yeah. As you see, you have Monsanto up, but that's because of the grains. You have Google up only, $700 stock only up 2. Here's another one for you, Priceline. Put this in the mix. What do you notice on Priceline? When you have the NASDAQ up like 10 points, you would think Priceline would be up. It's down. This is because of the rebalance. You watch. So that's what we're going to be watching. We're going to be talking about it on the premium side. And the last thing I want to talk about is tonight I have my day trading class, day trading for a living. And basically in here, it's $97 for 2 hours. And then the 2-hour class that includes 3 hours of me trading tomorrow and you having to put up to listen to me 3 hours is $197. I'm going to be on right at 9:30 Eastern or 8:30 Central for 3 hours going over when it's triple witching, rebalancing, no more buybacks. Really interesting stuff. So I hope I can help with everyone. So like I said, this is tomorrow. Tonight is the evening, is me just talking. I have 165 slides I'm going to go over. Some of them I'm going to go over pretty quick about indicators, chart patterns, but you'll have it. It's almost like getting a free book with this. And then you'll have the live trading on Friday. So I hope you can join us on that. And everybody have a great night.